AI is creating the biggest memory shortage the world has ever seen. Prices are soaring, profits are exploding, and two companies are leading the charge. But if you could only buy one stock today, Micron or SK Hynix, which one has a better chance of making investors rich over the next decade? Let's break it down. The artificial intelligence revolution isn't just creating demand for faster processors. It's also fueling an unprecedented boom in memory chips. While companies like Nvidia often steal the spotlight, there's another industry quietly becoming one of AI's biggest winners. That industry is memory. As AI models become larger and more powerful, they require enormous amounts of high-speed memory to process and store data efficiently. This demand has sent the dynamic random access memory, or DRAM, market into overdrive, with limited manufacturing capacity, soaring prices, and demand that continues to outpace supply. Memory manufacturers are enjoying one of the strongest business environments in years. Among the three major DRAM producers, Samsung, SK Hynix, and Micron, only SK Hynix and Micron offer investors a focused way to invest directly in the memory market. Samsung, while dominant, generates revenue from smartphones, consumer electronics, appliances, and several other businesses, making memory just one part of its massive empire. So, which company looks like the better investment? Let's take a closer look. The AI memory boom. Artificial intelligence has changed everything. Modern AI systems rely heavily on high-bandwidth memory, commonly known as HBM. Unlike traditional memory, HBM delivers massive amounts of data at incredibly high speeds while consuming less power. It's the perfect companion for AI accelerators like Nvidia's GPUs. As AI training and inference workloads continue expanding, demand for HBM has skyrocketed. In fact, inference, the process of running trained AI models, is becoming even more memory-intensive than AI training itself. That means the need for advanced memory isn't slowing down anytime soon. The problem? Supply can't keep up. Manufacturing HBM is incredibly difficult. It requires advanced extreme ultraviolet lithography, or EUV technology, and only one company in the world, ASML, produces the sophisticated machines necessary to manufacture these cutting-edge chips. Even more challenging, producing HBM can require nearly 3 times the wafer capacity of traditional DRAM, making expansion slow and expensive. As manufacturers dedicate more production lines to HBM, supplies of conventional DRAM have also tightened, driving prices sharply higher across the entire memory market. Industry executives now believe this shortage to continue for years. SK Hynix's CEO has even warned that 2027 could experience the worst memory shortage in industry history, with demand potentially exceeding supply well into the next decade. If those predictions prove accurate, both Micron and SK Hynix could continue benefiting from elevated pricing and exceptionally strong profit margins. SK Hynix, the AI memory leader. Although Samsung remains the largest memory manufacturer overall, SK Hynix has become the clear leader in high-bandwidth memory. The company was first to commercialize HBM technology and has built an exceptionally close relationship with Nvidia, becoming one of the GPU giant's primary memory suppliers. Today, SK Hynix controls nearly 60% of the HBM market, giving it a commanding position in one of AI's fastest-growing segments. Financially, the company has been firing on all cylinders. Nearly 80% of its revenue comes from DRAM, while most of the remainder comes from NAND flash memory. Revenue recently surged by almost 200% year over year. Gross margins expanded from 57% to an astonishing 79%. Profits increased nearly fourfold. Those aren't just impressive numbers. They highlight how powerful pricing has become in today's constrained memory market. Perhaps even more impressive, SK Hynix has begun signing long-term supply agreements lasting 3 to 5 years. Many of these contracts reportedly include upfront customer payments, minimum pricing guarantees, and no price caps. That means if memory prices continue climbing, SK Hynix stands to capture even more upside. The company is also aggressively expanding manufacturing capacity and aims to roughly double its wafer production by 2030. Micron, America's memory champion. Micron has also become one of the biggest beneficiaries of the AI boom. Like SK Hynix, Roughly three-quarters of Micron's business comes from DRAM, with NAND making up the rest. The company's recent financial performance has been extraordinary. Revenue more than quadrupled compared to the previous year. Gross margins climbed from just under 38% to nearly 85%, reflecting one of the strongest profitability improvements in the semiconductor industry. Micron has also secured long-term customer agreements covering approximately 40% of its business. However, unlike SK Hynix, many of Micron's contracts include price caps and take-or-pay provisions. While these agreements provide stability and predictable cash flow, they could slightly limit upside if memory prices continue rising faster than expected. Still, Micron continues investing billions of dollars to expand manufacturing in the United States and internationally, supported by government incentives and growing demand from AI infrastructure customers. Its role in America's semiconductor supply chain also gives it strategic importance as governments seek to reduce dependence on overseas chip manufacturing. Risks investors should consider. Despite the bullish outlook, memory remains one of the most cyclical industries in technology. Historically, periods of rapid expansion have eventually been followed by oversupply and falling prices. If manufacturers increase production too aggressively or AI spending slows unexpectedly, today's extraordinary profit margins could eventually normalize. Investors should also monitor geopolitical risks, export restrictions, and the pace of global data center investments, all of which could influence future demand. However, many analysts believe this AI-driven cycle may last longer than previous semiconductor booms because artificial intelligence is still in its early stages. The final verdict. Both Micron and SK Hynix are exceptionally well positioned to benefit from the AI revolution. Each company is generating record revenue, expanding production, and signing long-term supply agreements with major customers. But there are meaningful differences. SK Hynix currently leads a high-bandwidth memory market, enjoys an exceptionally strong partnership with Nvidia, and appears positioned to benefit even more if memory prices continue rising thanks to contracts without price ceilings. Micron offers impressive growth, strong financial performance, and strategic importance as a leading American memory manufacturer, making it an attractive choice for investors seeking exposure to the AI infrastructure build-out. At current valuations, both companies appear relatively inexpensive compared to many other AI-related stocks. Still, if forced to choose only one, SK Hynix appears to hold the stronger competitive advantage thanks to its leadership in HBM and its dominant position in one of the fastest-growing areas of artificial intelligence. That said, investors should be aware that SK Hynix's U.S.-listed ADRs can sometimes trade at a premium compared to its shares listed in South Korea, creating additional price volatility. For long-term investors who believe AI demand will continue expanding throughout the decade, both companies could remain among the biggest beneficiaries of the global memory supercycle. As always, diversification, careful research, and a long-term perspective remain the keys to successful investing. If you enjoyed this breakdown, don't forget to like the video, subscribe to the channel, and hit the notification bell so you never miss the latest updates on AI, semiconductor stocks, and the biggest investment opportunities shaping the future.